Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Synopsys so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 81 billion market cap. They're trading at $5.28 a share, and they have 152 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Free cash flow doubled from 2020 to 2022, 1.6 billion. It came down a little in 2023 to 1.5 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses, and that grows each year. It almost doubles from 2020 to 2023. Revenue is the sales for the company, and that goes up steadily each year from 3.7 billion to 5.8 billion. They have pretty good revenue growth, 14% in 2021, 21% in 2022, then 15% in 2023. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 50 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $44 billion. We divide that by 152 million shares. We get a calculated stock price of $285. They're trading at $5.28, so they're trading at 85% premium. It's a really big sell according to the model. There are 146 companies in the same industry as Synopsys, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't spend that much in CapEx, 200 million, between the median and average. They have a great debt to equity ratio, 0.1. For every dollar of equity, they have 10 cents of debt. They generate a good amount of free cash flow, 1.5 billion. A lot more than CrowdStrike. They rank 5th in market cap, 81 billion. They do appear overvalued according to their price multiples, all worse than the median, but all a little better than the average. They generate lots of revenue, 5.8 billion. They have a pretty good 5-year annual revenue growth rate, 13%, equal to the median. Let's take a look at their 10K. This is their income statement for 2023, 2022, and 2021. The way this company generates revenue is supplying tools and services to the semiconductor industry. And you can see their revenue goes up a lot each year, 4.2 billion in 2021, 5.1 billion in 2022, 5.8 billion in 2023. They completed their 2023 fiscal year. Their fiscal year ends 10/31. Their revenue in time-based products is 3.4 billion, upfront products 1.4 billion. So total product revenue 4.8 billion. Then they have maintenance and services 1 billion. That gives them total revenue of 5.8 billion. Here's their revenue by country. US 2.8 billion. That's a little less than half their revenue. 600 million in Europe, 900 million in China, 630 million in Korea, and 1 billion in the rest of the world. And you can see it goes up in every single country every single year. Their cost of revenue is 1.2 billion. Their revenue in products is 4.8 billion. The direct cost to generating that revenue is 760 million. And their revenue in maintenance and services 1 billion. The expenses for that is 380 million. So they have really, really good margins. Their biggest operating expense is R&D, almost 2 billion, marketing 889 million, G&A 400 million, amortization of intangibles 28 million, restructuring 77 million. Restructuring can be many different things. In this case, it was involuntary employee termination. So maybe they tried to get their higher paid employees to retire, so they gave them packages. Then they hired younger, lower paid employees. The total charges for the 2023 restructuring plan were $77 million. That consists of severance costs and facility exit costs. Their operating income 1.3 billion, net income 1.2 billion, up about 20% from last year. Last year was 1 billion. So their EPS goes up a lot each year from 5 to 6.40 to over $8. And their shares outstanding are pretty steady. 152.7 million to 152.1 million. Let's look at their balance sheet. Current assets of 3.4 billion, current liabilities of 3 billion, so their current ratio is above 1. 1.6 billion of cash and short-term investments. Here's a breakdown of the short-term investments. 2/3 of that, 100 million, is corporate debt. Then you have 15 million in treasury and T-bills, and 33 million in asset-backed securities. Accounts receivable is 950 million. They're actually owed 990 million. but they have to account for an allowance for losses because generally you don't get paid 100%. Sometimes companies go out of business before they pay you, or maybe some companies renegotiate their terms because they're low on funds. For whatever reason, they think $43 million will be uncollectible. They have $1.5 billion of PP&E, almost $1 billion of computer equipment, $135 million of buildings, $86 million of furniture, $21 million of land, and $265 million of leasehold improvements. That's the gross amount, $1.5 billion. $944 million is depreciated, so the book value, the current value, is $557 million. Here's that $557 million on their balance sheet. They have lots of goodwill, $4.1 billion of goodwill. They have total assets of $10.3 billion, total liabilities of $4.1 billion. Their biggest liability is deferred revenue, $1.7 billion. This is when a customer makes an advance payment before Synopsys delivers the product or service. $1.1 billion of accounts payable. This is how much money they owe their vendors when they buy on credit. When you take assets minus liabilities, you get your equity of $6.2 billion. They raised $1.3 billion from selling their business. They profited $6.7 billion from running their business. They bought back $1.7 billion of their own stock. Let's look at the statement of cash flows. They show us 21, 22, and 23. Their operating cash flow is $1.7 billion, same as last year. In their investing cash flow, they spent $189 million of PP&E and $300 million of acquisitions. Last year, they spent over $400 million of acquisitions. Before that, $300 million. Just recently, they announced a really big acquisition. They're looking to buy Ansys for $35 billion. This will be one of their biggest acquisitions, probably their biggest ever. In their financing section, you can see they buy back lots of stock, $1.2 billion in 2023, $1.1 billion last year. Let's look at a stock on Simply Wall Street. Its last price, $528, $81 billion market cap, up 2% in the past week, up nearly 50% in the past year. Let's see what they say about the company. They operate three segments: design automation, design IP, and software integrity. The company offers digital and custom IC, integrated circuit, design solution, verification solution that offers virtual prototyping, static and formal verification, simulation emulation, field programmable gate array based prototyping, and debug solutions. They serve the electronics, financial services, automotive, medicine, energy, and industrial areas. Incorporated in '86, headquartered in Sunnyvale, California. Look how low the stock was for such a long time, and then it just blew up starting in 2017, 2018, breaking through $500 a share. Simply Wall Street's valuation is $335. They say the stock is 58% overvalued. 15 analysts priced this stock at $611. Their revenue forecast for 2024 is $6.6 billion, 2025 $7.5 billion, 2026 $8.4 billion. Lots of projected growth with this company. Their debt did get up to $600 million in 2018. Now they're pretty much debt-free. They have very little debt. And you can see how much their equity has gone up each year, a really solid balance sheet. They're always sitting on a good amount of cash, enough to pay off all their debt if they wanted to. The CEO's salary is $500,000, total compensation $8.4 million. Their tenure as CEO is 2.2 years. There's been 2 insider sells in the past year, no buys. 89% of the company is held by institutions and 10% by the general public. Vanguard is the biggest shareholder, then BlackRock, Capital Research, T. Rowe Price, JP Morgan, Pictet Asset Management, Massachusetts Financial, Invesco, Alliance Bernstein, UBS, BNY Mellon, Amundi. Their employee count goes up a lot each year. They're currently at 20,300. And the ticker trades on the Nasdaq, London Stock Exchange, Zeta, Deutsche Börse, Mexican Bolsa, Wiener Börse, SPATS Europe, and Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.